thank you everyone for joining us this morning. We're going to be talking about a very positive topic of embezzlement and how business owners get nailed, and more importantly, how to prevent it from happening to you. And very excited to share with everybody what's going on. Today we'll be discussing we'll be sharing statistics and examples of fraud in small businesses, talking about signs and symptoms, how to go about uncovering the truth, and then how to protect your company moving forward. I'd like to start by introducing our presenters. We have Paul White, who's a fractional CFO and co-founder of P&L Business Solutions. A CPA, Paul provides fractional CFO services to his clients. After grad school, Paul worked with the USAID in Eastern Europe, helping private companies transition to a market economy, and then worked with GE Capital for 16 years in multiple finance and operational leadership roles. He's been a small business owner for 6 years and brings a practical operational perspective to help his clients solve their financial profitability and reporting needs. His firm, P&L Business Solutions, offers core compliance, bookkeeping, and fractional CFO services to small and medium-sized businesses. We're also joined today by Bill Barrett, a CPA with a master's in forensic accounting. Bill has over 20 years of public accounting and auditing, tax representation before authoritative bodies, forensic accounting, and white-collar fraud investigations experience, as well as computer and e-discovery analytics experience. Bill has been voted by his peers as one of Virginia's best forensic accounting and valuation specialists and has been published in Virginia Business. He's investigated fraud and misfeasance in corporations, federal and local governments, boards of directors, trusts and estates, professional practices, and national associations. He has directed teams of federal agents investigating multi-defendant money laundering, both domestic and international, tax evasion, accounting records construction, and white-collar fraud. Needless to say, between the two of these gentlemen, we are in good hands today.
All right. Thank you, Jennifer. Appreciate
You're very welcome.
that introduction. So one of the things, just to throw out some numbers, 75, 95, 5. So just keep those numbers in your mind. 75% of employees have admitted to actually having some type of theft from their employer, business-related theft, which is kind of hard to believe, but that's what the survey shows. 95% of businesses actually experienced embezzlement, and it's estimated that about 5% of business revenue is lost to fraud per year for each business. So for most small businesses, it's not really chump change, 5%. I mean, it could, easily amount to, enough to be a make or break point for small businesses if you're losing 5% of top line revenue or to fraud. One of the most common types of theft that occurs in every business is time theft. And that's, about 4.5 hours is what's estimated. That adds up significantly. It's an opportunity cost. It may not be cash out the door per se, but it definitely adds up. If you look at that over time, for a small business, it could easily come up to, $5,000-$6,000 a year for any minor, a very small business, and add that over time. And there's significant losses of opportunity there. And then small businesses, billing and payroll, happens twice as often in smaller companies versus large ones where there's more internal processing controls. So that's one thing to really keep your eye up on as a small business owner. Checks fraud and cash skimming are the two most common types of embezzlement that occurs with small businesses, which can be done by shortchanging customers or refunding stolen goods and receiving items for cash. So those are just some of the ways that fraud occurs, and typically in small businesses, and just give you a flavor of, hey, this is a problem and it does have an impact for businesses. But let's talk about a few more numbers. If the next slide, Jennifer. If you want to go to that. Okay, so we've got, most
Hey,
business
Paul,
owners. Yeah.
uh,
Oh,
just to let everyone know, this is interactive. So please feel free if you have a question or if you have an insight or if you have a statement that you want to make, just feel free to go on and do it. You don't even have to raise your hand. We'll get you
yeah.
and be
Thanks.
able to and integrate it into this presentation because uh, your participation and our reaction and back and forth is very important in understanding and absorbing a lot of the things that we're going over today.
Yeah, exactly. Thanks for that. We will have a Q&A time at the end, but like Bill said, go ahead and if you have a question now, put it out there now before, and we'll address it, or commentary to add more flavor to the conversation. Most businesses, they don't think about, hey, fraud is not going to happen to me. I trust my folks that are working for me. I've got family members working for me. And so, it's really kind of back of the mind type thing. And it's not something that really gets talked about in the general press unless it hits some level of threshold, because most people, a lot of fraud doesn't even get prosecuted in small businesses. So it happens more often than you think. I mean, from where I sit in our firm, of course, Bill's entire business is around fraud. So it happens quite a bit. And so I don't know if anybody else has some comments on your actual experience with fraud occurring in your business, but trust it does happen quite a bit. And when it does happen, it's significant impact. You can see, based on the 33% of all bankruptcies get their start from having fraud occur, and the average loss is almost $300,000, from companies that report that they've had fraud. So it's significant. So one of the things we want to,
Go ahead.
yeah, Jennifer, I was going to say, one of the things we want to talk about is just like, okay, so it happens, but how does it actually happen? So I wanted to talk a little bit about that. Does anybody have any personal experience that they want to share with the group that before we get started into this?
I'll share just from we've not had fraud, I don't think, in the way that you're explaining here, but member fraud and them being scammed with, phishing attempts and other type things has just exponentially increased. So just the fraud activity in general seems to be elevated more so here lately than past years.
Yeah, that's a good point, Amanda, especially from the business of financial institutions and customers, having, I think I probably go every 2 weeks. I probably get a phishing email, it seems like. And this is, and I'm a low key, radar type guy on the internet space, right? So, so it's definitely out there. So one of the things that, advice that you need to think about is when embezzlement and fraud occurs, you need to be thinking about, okay, so if I bring this up, what's going to happen? And you need to have your ducks in a row. One of the things, if you have a business, and we see, small business owners, and they always, not always, but many small business owners, like to take a little bit of pushing the envelope on, their buckets of where they put their expenses at as a personal business, et cetera, right? So if you have that type of mentality in your business and you do have fraud, you put yourself in another category of risk. One of a customer that, or client of ours, before we started working with them, they had 1099 contractor status on a lot of folks, but in reality, they should have been a W-2 employee if you go by the rules, right? Well, this contractor was stealing tools, right? So from his employer, and then when they confronted him, he was like, well, I should have been a W-2 employee, and you should have been paying me overtime for the last year. And so then, so the guy who stole the money got a lawyer to tell the employer that, hey, you really want to push this because, my client should have been a W-2 employee, right? And so we'll settle for 40K and make this thing go away, right? So that's real life here in Richmond, right?
Yeah. And hope that he doesn't share his experience with his coworkers who are also 1099 and should be.
So needless to say, they got that straight. And this was a franchise type operation. So they were like, well, when we were at the other franchise, that's how they did it. So we thought we were doing the right thing, but they just didn't get good advice from the accounting financial professionals on how to treat their employees, or they didn't ask, right?
Yeah.
I had a very similar case to that. So what we did is after settling out, we 1099 them for the quote $40,000 so that it was taxable.
Oh, that's good.
Yeah. So
That
at least
is a very good avenue to take when you are caught in that retribution trap.
Yeah. And at least it makes you feel a little better that they're not getting everything for free.
Yeah.
Right.
Some of these other examples here that we have, the first one, the office manager, looking at the different credit card processing. This
Yep.
was in one in which there was like an 8-person medical group. And what they did is they set up 2 billing companies so that you could bill one for the doctors and then one for yourself. And that is very difficult to find out, but we'll get into some of the discovery situations as we go along here.
Yeah.
The other dental manager, credit card refunds to her personal card. Again, you go back there and try to do reconciliations. That helps. But one of the biggest issues here, especially when we get here, is collusion. When people collude between each other in this first office manager setup, the way that they were caught is that the current office manager was still paying off the prior office manager and just started taking too much money, and the doctors are going, wait a minute, I think we got an issue here. And
Oh my
took
gosh.
a look, and what do you know?
Yeah.
I was talking to a friend just the other day who was sharing that they used to have a buy here, pay here program with cars. And so you'd buy the car and you could go into their dealership to pay your monthly payment. This was several years ago. And they had it so that you could pay anybody. And so like the sales guys would take the money and they'd write a receipt. This is how long ago it was, and everything was good. And the controller started going, this person hasn't been paying, this person hasn't been paying, and started calling all these clients. And they're like, no, I paid, and here are my receipts.
Yeah.
And what they figured out was one sales rep was taking the checks and putting them in his pocket, or the cash. Some of those were cash as well. And so fortunately, it took about 4 or 5 months from them to catch it because of their processes around delinquent accounts. But
Yeah.
Also, another thing, in looking at this, we're talking a lot with different examples of credit cards. But what you'll see happening, especially in companies that have traveling sales force or going to conferences, things of this nature, is prepaid debit cards. And what will happen is that debit card may not be used up, or there may be extra debit cards purchased that are not accounted for. And then therefore the individual in charge of that starts having dining out.
Walk away.
more
Yeah.
often.
Yeah. Yeah. Hey, Bill, I wanted to just mention too on the office manager scenario, we were aware of a different, it was a similar setup, but it was a medical practice where it wasn't multiple office managers, it's just a single individual office manager who took upon herself to get a separate card processing machine, right? And on those machines, you can direct them to which bank account the funds go to, right?
Mhm.
So in the afternoon, between 2 and 4 is when she used her machine or told the office staff, "No, we need to use this machine, now or whatever." So she, was able to do that all by herself, just in, it just
By thank you.
by having the bank account routed to hers versus the offices and setting up that machine herself.
Yeah.
Crazy.
But yeah, so is anybody else from the audience have some things you'd like to share that are kind of weird, strange, and ugly that would be relevant?
And it doesn't have to be you committing the fraud. It can be someone else.
That's right. That's right.
When I teach, I always tell my class, by the end of this class, you'll know how to detect fraud.
Funny. Well, let's talk about that. Specifically how to spot fraud. And this fraud triangle, Bill, you introduced this to me, and it makes a whole lot of sense. You want to share?
Yes, the fraud triangle really started out with the federal agents that went in and discovered Al Capone's fraud. They looked at the fraud happening there, and right on down to, as we know, traced it out to income tax evasion for the fraud. The easiest way to prosecute someone as opposed to actual theft. But we go into fraud, and there's 3 parts in a triangle that you will pretty much always find in a fraud happening. And that is the perceived opportunity. Why does a person steal? Just like a dog, because they can. The pressure to do it, we can start getting into personal pressures and things of this nature, drug use, divorce, you name it, kids going to college. I had one in which the controller was buying computers for their children going off to college and things of this nature. And the rationalization part. The rationalization part is very heavy duty, because that most frauds start one thing happening and then they rationalize it. Well, they're doing it too, or like in that doctor's office, you would see things happening with the doctors themselves. The rationalization is that I've worked too hard, not getting enough money. They're getting freebies and I'm not. So, and I'm only borrowing the money, I'll pay it back. So we start going into this with the fraud triangle. We'll see more of that and understanding it as we go along. But this is something to constantly put into your operations so that you can get that. So the perceived opportunities, as we start going in here, this first few ones, when we see one individual doing things, that is generally because in a small business, the owner and any of the other staff is involved in sales or filling cavities or doing operations or whatever have you. And so it is the one person that is the bookkeeper or the controller, whatever you want to call him or her, that is doing all of the accounting work and there is no, they're taking on the whole thing. The spouse skimming from the company and the cash drawers, that was like in the one that I was telling you about with the doctors. The doctors' wives would come in and go to the cash drawer and say, I need $100 because I'm going shopping today. Things of this nature. So this is how that they were caught. Those things. Honesty, the company culture. Rarely do we see that happening in a situation where small businesses actually have a company culture for communicating honesty. Paul, did
Yeah,
you want to take the others?
yeah, Bill, you're right. It's that company culture, which the owner, in his mind is like, oh yes, we have a good company culture, but the best way to have that as an outside view of your company culture or your employees, culture that they have towards the organization. And so many small businesses, they kind of neglect that whole area of fraud training, and an expectation that, hey, we're serious about preventing fraud and we take risks to prevent it. And this is your part in how you do that. So having that training is really important. It's not expensive. A lot of insurance companies will do that for you. And we'll talk a little bit later about some of the insurance ways to reduce your risk. And then, not having a periodic review to be able to catch the potential embezzlement. It's, if you got the same people doing the same job over time, you don't see the forest for the trees, so to speak. And so you can miss out, whereas an outside view may be able to catch something that looks odd, more so than somebody too close to the process. And then, of course, what do you think it is, Bill? 70% of the time when small businesses, the fraud is coming from that individual that we trusted, we relied on them, and they were, our best friend, our hardest working employee, and they were most our valuable employee, but they're the ones who committed all the fraud. That's where it most likely happens, unfortunately. And you just have to recognize that and put in the steps, and we'll talk a little bit later about how to mitigate that opportunity of it that's there.
Jennifer, I think we need to move on.
Yeah. And so there's some anecdotal red flags that the business owner can look at. Employee behavior, any changes in the employees is one thing. Just keep your ears up and an eye out. Definitely, you got some movements in the financials which you can't explain, that obviously warrants further follow-up. And then in your purchasing processes and with customers, the employees that interact with them, if you see where some unusual closeness, that can often be a red flag. And then most importantly, I'm sorry, Bill, you want to comment about that?
Most importantly, I'll let you finish.
Yeah, most importantly is when you have your business at a certain level and you implement controls and processes. Over time, you can let the ball kind of fall by the wayside and say, oh, we've got, let's make an exception to this rule in this case. And then we do it again next month, then the month after that. And pretty soon you do not have any controls. And that is a huge red flag from my perspective and Bill's perspective on where you see things fall apart, is when you have control, or you say you have controls written down, but you don't follow them.
These red flags are pretty much under the pressure area in the fraud triangle. The employee behavior that we were talking about. One thing to analyze, and it's coming out now in a lot of the forensic courseware, and that is when the generation really before us grew up under computer games. So the ability and the thrill of winning in a computer game is transferred into the business in the sense that, wow, I took $100 or I took $42.99 and no one saw it. what power do I have? And then they continue it on and things. So game playing is one thing that you can see in an employee's behavior that might do that. The closeness with vendors and customers that, needless to say, cash register people will return items that haven't been there to return and take the money. Vendors will give one of the purchasing agents a free this or a free that. All these kind of things will continue to happen. And that unusual, unexplained financial statement trends. I just had a case in which a business owner was selling their business. What she did is for 3 years, she paid business expenses, quite a few of them, maybe about 20% of the business expenses, out of her own pocket. What does that
You
do?
usually hear that the other way.
Yeah, well, you would think it would be the other way, but
Mhm.
it showed the business was making more of a profit than it actually was. So when she sold it, she was getting extra money on the sales price that more than made up for paying the taxes on the profit and paying the expenses herself. But we came in and found it out. So that's something to, again, consider.
Yeah.
The missing documents and things of this nature. Review the canceled checks. There is so much happening. Make sure that you get the canceled checks either as a picture of it when you get your bank statements back, to make sure that you can look at the front and the back. So much is happening that, remember when they used to have pens with erasable ink on it? Well, people would write the check in pen. The owner would sign it. They would come back and erase the something and fill it in and all. So you have these types of things, the excess voids and the credit photocopies. If you take an original and first you use the original, then you alter it, then you take a photocopy of it, and then you alter the original again and take another photocopy of it. So now you have 2 to 3 invoices when you only should have had 1 invoice. So these are things that you see, the counterfeit and fake documents, and you're more and more as things go online, you're going to see the computer problems that these are associated with the fake documents and all.
Yeah. So now that you've scared us.
Yeah.
So you might suspect it, but now how do we find it?
Well, certainly if you suspect it, when I go in on a 2-stage thing. If someone is just suspecting it, I go in and say that I'm here to analyze whether you need a new computer system, or if you're going to change your accountants, or you're going to be getting some new software, and help me understand things to get things going. If I start seeing the indications of fraud, called fraud indicia, then we will have a second stage where I come back in, usually with a team, and we do a full-scale fraud investigation. When you get into estate settlements and things, I cannot tell you how many fiduciary cases I have. There's always a contention there, either between the inheritors, especially siblings, and all. The other thing is where you have the fiduciary, they're in charge of everything, so they can do generally what whatever they want to do. Reasonable compensation is the status of what a fiduciary makes. So what's reasonable? We'll see. Divorce proceedings. Yes, there are 3 stages in a divorce. The first stage is where the independent earning spouse wonders what it's like to be free again, to be single again. Then the second stage, after they had that dream for quite a while, is the stage in which all the assets start disappearing or being put aside so that spouse has the ability to support herself or himself after the divorce. And once they feel that they've got that together, especially in closely held businesses, all the time, you have that. And then, of course, is the third stage in which the spouse goes to their spouse, has that spouse start an argument with them so they can say, well, if that's the way you feel, let's get a divorce. That's kind of a little bit of humor in there, but we see that happening quite a bit. And the money hiding stage is generally about 2 years out before the divorce proceedings start to kick in.
Interesting.
For every lock that has ever been invented, there is an infinity of keys. Some of them the lockmaker knows about and can make them work or prevent them from working, but there are umpteen others that even the lockmaker hasn't thought of. And that's where human nature and someone that has a rationalization to commit fraud is going to look at how that lock can be opened and broken without someone detecting it. This is one of my favorite quotes here on detecting corporate fraud. Okay, finding the proof. Okay. People say, oh, how can you detect fraud? It's like finding a needle in a haystack. And I always say, actually, it's finding 2 needles in a haystack because of the double-digit accounting that we have, debits and credits, that if someone is stealing cash, then they have to make an expense to cover for it. So we go into that and look at the double entry analysis. The general ledger. If you ever wanted to read one of the biggest books of fiction, go to the general ledger. It is a work of art, and it should get a Pulitzer Prize, I'm sure, because most of it, that's where it shows up. And in reviewing the general ledger, there's a whole way of doing that we could get into later. But when we go there, but the ratio analysis is very important for business owners. They can start looking at their financial statements and seeing that, if inventory goes up, then other things need to go up. If they don't go up, then you start seeing why. Why would you have more inventory on hand when you haven't purchased it, number one? Or if you've purchased more and the sales aren't there, then someone is stealing sales money, but filling it in by purchasing it. Payroll taxes and salary expense. So many times you have ghost employees, and the person in a sales force and construction crews and things of this nature will have an extra person there that doesn't exist. interest expenses and long-term debt, things of this nature. This is even where you start seeing the owner putting money, taking money from the company and calling it either a business expense or a debt that gets written off a couple of years later. So we have these types of things, and you're doing.
Yeah. Bill, I just was going to say the concept of ratio relationships as a business owner seems to me to be one of the I don't want to say easiest, maybe non-threatening ways for me to analyze what's going on, because looking at these, I don't necessarily feel like I have to understand what a check should look like. Like, what am I looking for to find the fraud, the details of it, these ratio relationships. To me, it's a concept of looking for things that don't look right.
Yeah.
So that you can ask
Yeah,
questions.
very much, Jennifer. In these ratio relationships, if you take your income statement, you have sales, cost of sales, expenses, profit. If you change them into percentage points, where sales is 100% and 40% cost of sales and 30% expenses, and then 30% profits type of a thing. If you compare those over several years in lines, that's the vertical and horizontal. Yeah, the vertical, you can see how things are changing in it. And if you start seeing sales are staying the same, but other things are happening, well, certainly, yeah, the cost of goods goes up and you haven't raised the sales price yet. That may be a firm indicator, and that's what many employers look at so that they can keep their sales above, or consulting expenses and things of this nature.
Right.
But yeah, you're right, Jennifer. That should be done constantly.
And correct me if I'm wrong, Paul, but most I'm familiar with QuickBooks, but I know there are other accounting packages out there. Getting those percentages is a fairly easy thing to do, isn't it? So like your accountant should be able, or whoever's doing your books should be able to print off reports for you, so you don't have to necessarily do it, but you ask them to include the percentages. Is that?
Yeah. So as a business owner, from our experience, most business owners don't even, they look at the sales. Yeah, that's
Right.
really what they're,
just top line.
the incoming revenue. That's what they typically care about, right? They're too busy to look at the rest of it. And so they don't ask their bookkeeper or their person that's doing the books in the company to put together a reporting package that contains just, what Bill was talking about, the percentages over time, to look at how, expenses are moving in relationship to each other. And it really just gets down to the lazy factor. I call it lazy factor, but it's really the worn out factor in many cases. The business owner is busy bringing in business, managing the people. Sometimes, they're doing multiple roles and they're just tired. It's like, I don't want to look at that stuff tonight. Yeah, I'm ready. I want to spend the time with the kids at the ball game or whatever. Right. So it's just something that gets neglected for various reasons. And so having the expectations of the bookkeeper that's working with the business to do that, and even provide that oversight is very valuable. And all it takes is for you to ask to have that done. A good bookkeeping firm will do that for you and talk to you about that, but it often doesn't happen. So
awesome. Thank you. So where do we go from here?
Yeah, so obviously the key thing is to do what you can to break this fraud triangle, and setting up the ethical environment at the top of the corporation is key. It doesn't cost anything to do. It's just a little bit of time investment, communication investment with the employees. and making sure you have policies and procedures and expectations of employees, and they know that this is the culture, not that the owner thinks this is the culture and the employees, have this totally wide disconnect, because we'll see that, quite often. And so training the managers to, about the concern for fraud and what to look for. Even just an annual acknowledgement letter when you review the employees, performance is like, hey, this is our annual acknowledgement of our fraud policy for the company. It costs nothing to do that, but it can go a long ways in helping set that tone and culture in the company. And of course, obviously looking for ways to reduce employees' opportunities to commit the fraud. In small businesses, you've got multiple, or a single employee that has multiple roles. So we understand it's a little bit difficult, but in scenarios like that, but you really need to get into the habit of having more than one person knowing how to do the job, and quote unquote forcing people to take vacation so that someone else can do the job while they're on vacation, so that's your opportunity. If something's been going on, it often can get caught and identified, during that time. The secret shopper or secret customers approach is another opportunity that is not that expensive. It does cost a little bit of money, but you can homegrown your own, way to do that with, or hire an outside firm to do it. And then reviewing those financial statements each month and not getting behind on that. And the bank reconciliations is key. And once you get behind, then that's when things start to happen. Generally, the employees know that, it's behind. I know there's, a scenario we're seeing recently of an employee that put the team lunch on the company card, but he also submitted a personal expense report for the same meal, right? Just because they know that it would never get looked at and reconciled, until after he left, right? So,
Yeah, until after he left.
Exactly. So,
and also performing the drug test. I don't know about that per se, but we're starting to see a lot with the drugs being legalized these days, that the perpetrators generally do drugs, marijuana and things of this nature. And that's one thing to look out for. One thing I wanted to say here, Paul, before we moved on, was that after a fraud happens, 80%, the statistics, 80% of all business owners feel it's never going to happen again, that they caught it. Okay, it's good. Let's get back to work and go forward, team. But it generally does happen.
Yeah.
Within a 3-year period.
Yeah.
Wow. Yeah, that's amazing. It's kind of getting burnt once, but burnt twice is really bad. Yeah.
The drug tests, I did want to, so I have an HR background, and just to kind of mention, you can still do drug tests for everything. And as in the States, as marijuana is becoming legalized, you can not look at that result and just look at the other results to make determinations. And it's not saying that if you use drugs, you will perpetrate fraud, but it goes back to that triangle, I think, from what you were saying, Bill, that's the opportunity, or the
pressure and the
pressure. Thank you. I couldn't think of the word. I've worked in an environment. I had one job where we had a team of individuals who could go to a local hardware store. We had an account and they could purchase stuff. And we ended up having to put more and more policies in place around that, because they would go and buy their things for the job, but then throw a gift card on there. And then the next one, they throw another gift card on there. And then what they would do is they'd then turn and sell the gift card actually for drugs, which is kind of interesting that you bring that up. But it's just that I thought that was an interesting piece.
Or not only put a gift card in there, but put an extra chainsaw in there and then
Yeah.
later go back and return it for
Right.
Oh,
cash back
smart.
or
Yeah,
put it on their own credit card.
Yeah.
yeah,
Yeah.
yeah.
Yeah. And one of the things too, in the HR side of things is just having that employee hotline. And it may not, you ask your benefit provider about that. Insurance companies, benefit providers generally will offer that service. Or if anything else, just have your outside bookkeeping or CPA's firm number on there. You know, they'll looking at the books anyway. So ask them if they would be willing to do that. It's another solution if your insurance or benefit provider doesn't.
But to make sure I understand that, Paul, what you're saying is that you could ask an outside source to be an anonymous tip line,
Exactly.
basically.
It's like the Embezzelment type approach where you call this number and you're anonymous, you know, work for the company and I see something fishy going on. Who do I tell? I really don't want to maybe tell the business owner because it might be his wife.
Right.
You know, yeah, that's a type of thing. So people are more open to report that, or could be more open to report it if they know it's anonymous.
Awesome.
Especially in a small firm where everybody knows everybody's business, right? So,
Right.
Yeah.
And that leads us well into this process improvement section.
yeah. So improving the process is an ounce of prevention is always worth a pound of cure. Sometimes you need to have an outside view of what's going on just because you're too close to it. But you know, the common sense things, you know, what are the checkpoints in your financial collection and billing processes where cash flows in and out of the business? The cross training and sharing responsibilities among the employees so that not one person is totally 100%, you know, that's their territory and nobody else touches what they do. And that happens to be a financial area. That's an area of risk. Like we talked about earlier, the setting the code of conduct and expectations in that process. And then, you know, audit controls and financial reporting and review. So those are 4 areas that typically every business needs process improvement in those areas, you know, in the small business, medium-sized business world.
Mhm.
The other piece is company culture. You know, we mentioned this earlier, and just having that, making sure that you intentionally set the standard for your company culture of no tolerance of fraud and dishonesty. And then backing it up, like I said, with the HR communication, you know, once a year, employees acknowledging that, the process for reporting any fraud in the company, and then the training for the managers, employees, and key people in the business on what they should be looking for. All of those things are fairly low cost or no cost, you know, more so than, you know, a time investment. And it definitely is worth it, because if you can remove the perceived opportunity in the triangle, that's, you know, that's a significant piece there. People typically do things because they think they won't get caught. You know, if they think they'll get caught, you know, they typically stay away.
It seems to me like what you're saying is that, you know, a lot of us have this natural inclination. If we don't talk about it, it won't happen. You know,
Right,
it doesn't
right.
exist. You know, if we don't
Yep.
acknowledge that it's even a possibility. And it sounds like what you both are recommending is kind of flipping that and saying, acknowledging that, hey, this is a big deal in small businesses, and we trust you, you know, as individuals. However, the success of our company rests on our ability to have cash flow and you know, really know where our money's going and keeping the money with the business legally. And so this is where we stand on it. And we're not necessarily going to tell you what our checks and balances are, but know that we have them. And here's a number you can call if you see something that sounds wonky. But you can also always feel free to reach out to me, kind of thing. That type of, is that a good summary of it?
You're exactly. And most small businesses, you know, don't do that. Even if you do that, you know,
As they say, the majority of fraud is discovered just by chance.
Exactly.
The
Exactly.
second most common detection of fraud is from the outside, calling up to say this happened and that happened. And you go, well, we don't have that record here, type of a thing. But I think a lot is building your staff together, even bringing it into the company culture that fraud is out there. Many businesses that I've seen that have gotten that are small to medium size share part of the profits with their staff,
Yep.
and that helps them look at an honest way to win as opposed to a non-honest way of winning.
Yeah.
Yeah.
One of things that I've heard anecdotally for years and years is making sure that the people in roles that handle money, whether it's physically handling the money or accounting, documenting the money, whatever, that they should, you need to have them take at least 1 week consecutive vacation every year,
Oh,
because
yeah.
it gives you that opportunity, that window for things to accidentally pop up.
Yeah.
Very much so.
Yeah. The required vacation. There's a reason, more than one reason for that. Exactly.
Yeah.
Are we up to Q&A?
Yeah, we got.
Yeah, we are. Any questions?
Let's see, Jennifer, we've got, let me go back to one comment
Uh-huh.
on what you can do, for asking for help. Your insurance policy does cover like $10,000 of coverage for fraud, which that's not going to go very far, right? Look at those earlier statistics. It was like 290,000 was like half of the average value of fraud. So ask your insurance agent to look at that, because the company can write coverages for any amount that you agree to and willing to pay for. So just because it's there at $10,000 doesn't mean you can't change it. And your agent may not think about asking you to ask that question of you. You can also bond your office administrator or the CFO role with their fiduciary responsibility, et cetera. And that will help if you do have an issue and have losses after the fact. Obviously, it's a little different than preparing your business to prevent it from happening in the first place, but those are just some ideas to think about. So,
and what does that mean to bond them for people on the line on?
Yeah, so basically you've got a policy that says they're going to do their job in a professional way. If they don't, then the insurance company will cover, the actions of them not performing their role properly.
So bonds you go to your insurance. Interesting. Okay.
Yeah, it's very niche
Insurance
market.
product.
So it's very niche market. So you'll need to talk to a commercial agent that covers that.
Any other questions out there? Anything coming up for people? Are you happy you've attended? Are you terrified to go back and look at things?
James, Antonio?
No, I mean, I appreciate the
Tyrese?
information. I thought it was really good. I mean, I work in a public sector government agency, so a lot of this kind of resonates. We have public safety and we deal with criminal crimes, and we see a lot of this happening. And we see a lot of this happening for people that have small businesses. So it's interesting to I guess from my perspective, really, I think my focus has been like, what kind of technologies can be put in place to help, do some of this detection and automation of detection of fraud versus it just being more like looking at the books and trying to identify it, through logs and ledgers and things of that sort.
That's a great question.
Yeah, there's multiple ways to find the fraud, and so every avenue helps, especially in a large organization.
Is there anything that so from a technology standpoint, I think the reports out of the technology are good because that shows you what's going on, but in a way, like a modified way, so you can see if it looks different, that comparing to each other. But are there other suggestions?
I'm curious, for the information that was provided, as how would a startup process this information and then protect their business operation going forward, like just getting started? Because they're the only person really within their operation, so they're probably not going to steal from themselves. But how could they prepare, as because they're going to be in a critical stage with that first employee, right? It could be make or break. And so if they, hire the wrong person, then it could sink their ship before they really even get it sailing. So what
Right.
could a startup look for,
A
as
startup,
they look to hire those first
the
employees?
best thing for a startup to do is when the startup team or individual to get a good bookkeeping accounting system put in there. And one that also has a lot of cost accounting. The cost accounting is the most important thing so that they know that what they're charging is going to give them a profit. As opposed, no matter if costs go up, then they need to be aware of that. Also, that they need to continue to shop for the best vendors that they're doing. A lot of this is one in which once they get their accounting set up and looking at those things, especially on the cost accounting side, when they bring someone new in, it's generally pretty much going to be in sales or whatever, as opposed to office management. But if it is office management, that's one thing. But I would suggest for them to use an outside consultant in a bookkeeping situation. They can get them all set up, keep them going and making things look, and their expenses for that are covered by understanding that if they're only charging, $125 an hour for consultations, they may need to charge $150 an hour for consultations. These are the type of things that are there
Yeah.
that
Yeah.
will help them out.
It's really, Bill, I love that you talk about that because, as a business coach, I have so many people start a business because they're really good at a thing, doing a thing or making a thing. And Paul mentioned earlier, they focus on the top line, right? And yes, you need to have money coming in to be successful, but more importantly, you need to control how much money is going out. And that's where that cost accounting, looking at what are your expenses and how do they relate to your income? And can you find ways to be more efficient? And if you treat your business from the start, Antonio, like a business, you build the habits before the good habits
Before
where
it's
you get the
critical.
people.
Yep. Yep.
Yeah.
Yeah, Antonio, there's a couple things. One is like, okay, on this topic of fraud, in a new business expanding, setting that culture at the top and that expectation as new people come on, that's an easy thing to do, right? Like Bill said, having the accounting processes in place and being able to know their numbers and what they can afford as they grow, and having the right pricing. It's key. If the business owner doesn't understand his overhead expenses and his variable cost, he will never, or very likely will succeed over the long term. So, going through that education process with the bookkeeper or the financial person that's helping, run the office is critical to their long-term success. Because if you can't price right, you will be out of business.
Mhm.
And Antonio, advising the business so that they know they can have consultants come in for a brief period of time, get the thing ironed out, set up, and leave. And that's what consultants do. And whether it's insurance or HR or finance, things of this nature, it is very important for them to get help because they're out helping people with their business.
Mhm.
Okay, so would you guys agree that it's probably important for the startups to start eyeing CPAs or bookkeeping professionals really in the ideation phase of their business as they're planning it out and making sure they have the cost situated for that, whether they're hiring a consultant one time or short term, that should be baked into like the initial plan.
Yeah, as an entrepreneur is doing their business planning, yes, they should bake that in. At least a startup component of it, right? If they don't, what happens is the business owner ends up doing the books themselves. They do it on the weekends at nights when they're tired or worn out, and it's kind of gets sloppy, and it turns out to be a mess at the end of the day in 75% of the cases. So then once it becomes a big mess, then they say, oh, I need to hire somebody to help me straighten this out. And that's typically when we get most of our customers calling us for the first time. But yeah, if they can do that from the get-go, it will save a lot of headache.
And not only that, they should look into whether they're going to engage someone with a certification and a license, as
Yeah.
opposed to someone that has no license, but quote, I mean, there's bookkeepers and then there are bookkeepers.
Yeah.
Those that are licensed, such as CPAs, things of this nature, even certified tax professionals and all, to do your bookkeeping and your taxes, have a standard that a non-licensed person doesn't have, or a threshold, and things of this nature that keeps things going, and more of a comfort level, I would believe. Yeah.
Yeah. There's a QuickBooks CPA, bookkeeper that charges about $300 an hour, and he tells his clients, "I'm the cheapest guy in town." Because you think I'm expensive, hire the cheap guy for 3 years and figure out what you got to pay to straighten out the mess. So, but yeah, starting it from the get-go with that mindset is really, I think, key, Antonio, from your question there.
Shanice,
Thank you.
do you have anything?
No, I don't have much. I was just, I was thinking of a story because I used to work at JCPenney, and I remember seeing people get arrested for, like stealing from the company. And it was kind of scary because I was young back then, but it's definitely a real thing. People think that they can get away with, certain things after they've done it for years and years. And then over time, it's like, no, you gotta crack down. And I've actually seen it a number of times. So this was speaking to that. And definitely, I think, like Antonio's question, as a small business, because I have my own small business also. So just think, because this isn't the part that I'm familiar with. Like, I don't like doing the money stuff. Like, I'd rather somebody else do it. But it's a good thing to know, at least be aware of like how it works, what's happening, because if you don't even know, as a person that doesn't like doing it, when somebody else is, doing it for you, you want to at least know that they're doing what they're supposed to be doing. So I think that was very good also.
Bravo. Yes, you're absolutely right. Well, as I tell people, I'll never go out of business. Yeah.
Mm-mm.
And I think at JCPenney, they took more than pennies, didn't they?
Yeah, it was a one lady. So you know how they try to get people to get credit cards, and as an employee, we would get money, like, I don't know, $2 per credit, per credit application.
Yeah.
She was just like asking people for their social security card and literally just signing any and everybody up, like without telling them that it was an actual credit card. And mostly a lot of people that didn't speak a lot of English. So she would get, an extra couple $100 on her check just from credit cards. And it was just kind of crazy that that's why she was doing it. But it was, the way she did it was like completely wrong.
Everybody for attending today, and we appreciate questions and participation. If you have any questions afterwards, Bill's going to send out a report, Bill, I believe, from the kind of a summary of the report to the nations from the Forensic Accounting Group. And so that's really a good read for people wanting to learn more about the topic. So we'll be in touch. All right. Thank you.